Welcome everyone to today's webinar, jointly hosted by the ASX and Social Suite, titled The Future of Retail Investing, Unpacking Trends with the ASX. This webinar will give those involved with ASX listed companies, either as directors or executives, advisors, or even investors, information and insights that will help them answer this very important question. Is your ASX listed company prepared for the changing landscape of retail investors? During the course of the webinar, you will be presented with rare insights directly from the ASX as to what exactly are investors thinking on the topic of ESG, how it's shaping their investment decisions, and importantly, how changes to investor demographics are rapidly changing the investor landscape. You'll also hear about easy to implement solutions that ASX companies can introduce into their business to access this investor opportunity. Our presenters today who are here with me are Rory Cunningham, Senior Manager, Investment Products at the ASX, and Dr. Tim Seigenbeek van Hoekelom, Chief Impact Officer at Social Suite. Both are leaders in their field and post their presentations will be on hand to answer any direct questions from the audience. So if you have questions, submit them during the presentation or the Q&A session, and I'll put them to our panel at the end of their presentations. Okay, let's get started. I'd like to introduce Rory Cunningham, Senior Manager, Investment Products at the ASX, who will talk to the findings of recent research conducted into the views on ESG, from investors and how this may change over time. Thanks, Rory. Over to you.
Thanks, David, and thanks to Tim and the Social Suite team for inviting us along to present the results of the ASX Australian Investor Study. For those that have not come across this study before, I'll just provide a little bit of context and background to it. This is a piece of research that ASX produces every 2 to 3 years, and we've been doing this research since the late 1980s. And what started out as really a study of how Australian investors were buying and selling shares has expanded into a broader range of trying to really understand the behaviors, the attitudes, the desires, the goals of retail investors across Australia. And we've expanded our reach in terms of understanding the types of products that retail investors in Australia use beyond just shares to also include other listed products such as exchange traded funds and also products that are not listed on the ASX such as term deposits. What we thought we would do for this session is I'll spend about 10 minutes just going through some of the results from the ASX Investor Study. And I've broken that down into 2 sections. First is a general high-level overview of what the Australian retail investor landscape looks like in Australia. And then I've got a couple of slides to share with you about their attitudes and behaviours towards ESG investing. Of course, this is only a little bit of the insights that have been generated from the investor study. We've got a lot more information available in a very detailed booklet that's available for download on the ASX's website, as well as a lot of supplementary videos and content also available on our website. So with that, I might kick off to the first slide, which is really an overview of the number of investors that are in Australia. And we're quite a lucky country in that there's quite high retail investor adoption in Australia when we compare it to other countries around the world. In fact, just over 50% of Australian adults are investors. So there's 10.2 million Australians that hold investments. Now, 7.7 million Australians hold investments on the exchange. The average investor in Australia is 47 years of age. And what has been really pleasing to see is we're starting to see better representation or high representation from female investors in Australia. Currently, there's 58% of investors are male and 42% are female. But what has been great to see is that over the last couple of years since we last produced the research in 2020, we've had 1.1 million new investors in Australia, and 50% of those new investors are female investors. So definitely the female investor population is on the rise in Australia. Now, in terms of what products they use, shares by and far, or Australian shares, I should say, by and far are still the most widely held investment type in Australia. 58% of Australian investors hold shares. Just a few other call outs on this slide as well. Australian residential investment property is also the second highest at 35%, though notably that's down compared to our last survey results in 2020. In terms of some of the fastest growing product sets, it's worth mentioning exchange traded funds. By way of background, I work in the investment products team of ASX, and one of the product structures that we look after are exchange traded funds. In Australia, those funds are predominantly, probably 90% plus, are used by retail investors. And it's one of the fastest growing product categories in Australia. Also, just by way of background, in terms of the subset or the population of investors that we're polling here, it is retail investors. So we're trying to capture their investable assets or how they invest their funds outside of their family home. Now, it does include self-managed super funds, but it does not include other superannuation, such as our superannuation that's held via our employers. Now, a lot of our research starts to break down the survey findings by investor categories. And what we've done is, in the research, is broken down a lot of the numbers by different investor segments. So the first segment is next gen investors. These are investors aged 18 to 24 years old. Wealth accumulators are from 25 to 49 years old. We have pre-retirees and then also retirees. And this slide, while quite detailed, shows you how different age segments of Australian retail investors prefer to invest their money. And you can see that older investors in particular, those aged 50 years and above, are more likely to hold Australian shares compared to other age categories. What's really interesting, I think, from an investor landscape perspective, are next generation investors and their adoption of exchange traded funds. They're more likely than other age groups to buy exchange traded funds. Research from the US actually shows that younger investors are more likely to buy an ETF than they are to buy a direct share as their first ever investment. We haven't seen that quite translate into Australia. The numbers still show that the first investment is most likely to be a share for a younger investor at over 30% of those investors buying shares, but it's definitely something that's on the rise. The median portfolio size. So the median portfolio size of investors has increased since 2020, which is a good thing to see, obviously. The median portfolio size is now $170,000 in Australia. And on the left-hand side, you can see as a percentage of investors how that breaks down by different portfolio size ranges. What we also do is we track trading behavior. There's a range of insights that come out of the investor study, such as how often investors trade their portfolio, how often investors look at their portfolio, and also the amount that investors are trading on a periodic basis. And you can see here that there's quite a wide range of trades that are placed from a dollar value perspective by retail investors in Australia. Now, in fact, over 50% of those investors that hold on exchange investments, such as shares or exchange traded funds, are likely to place trades for $5,000 or less. So that tells us that there's a huge population of the Australian investor base that are likely to hold small investment sizes or small investment parcel sizes. As many of you will know, online brokers are the most used trading platform in Australia. In fact, 70% of Australian retail investors used an online broker in the last 12 months. I think what's interesting here is that that number has actually dipped slightly since 2020, an immaterial amount, but it's still a dip nonetheless. And also what has dipped since 2020, investors' usage of full service brokers. What we have started to do since 2023 survey is to start tracking the use of retail investors adoption of micro investing or robo investing apps. And you can see on this slide that 6% of on-exchange investors invested through a micro investing app. That's a trend that we're seeing in the US. It hasn't quite translated over into Australia yet, but it's something that we're keen to track and see if there's growth in that particular way of accessing investment opportunities. A lot of the consumers of the report are product providers, such as ETF product providers. And one thing that they're really interested to know is, how do investors gain access to information that helps inform them where they should be placing their product education? What's really interesting out of the research is that family and friends are by far and away the #1 source of investment information for investors in Australia. Number 2 is online broker websites. So clearly, with 70% of Australian investors placing a trade through an online broker, that is going to be a great resource for those investors to get further information about how and where they should be investing. And I know that we deal with a lot of online brokers at the ASX, and we work with them very closely when it comes to investing education, and they spend a lot of time developing their education through their websites. Other sources are the ASX website, and most importantly, the 4th most common site are company annual reports and also the company website. So a lot of investors wanting to access information directly from listed companies. And investors prefer a diverse range of mediums for receiving that information. Video content, we've noticed this over the last number of years, has been increasing rapidly in terms of investors' preferences for receiving content, and in particular, short videos. We notice on our own investment and education videos that anything over 10 minutes starts to have a huge drop-off rate. So definitely short videos are the way to go when communicating with investors. The next section, just really quickly, on the study that we tracked investor behavior, was around retail investor attitudes towards ESG. In Australia, 31% of investors make active investment decisions based on these ESG considerations. Now, that is made up of 6% of investors that cite responsible investing as their top priority, 14% of investors that invest in companies that are focused on creating a positive impact, and 11% of investors that actively avoid companies that create social and environmental harm. Also, I think what's interesting to note is that there's not a huge divergence between age segments when tracking their attitudes towards responsible investing. So from next generation investors through to retirees, there's not a lot of difference in terms of their attitudes towards responsible investing. At the margin, it's fair to say that younger investors have a higher slant towards responsible investing, but it's relatively immaterial compared to older investors. And when investors are looking at the different factors of ESG, be that environmental, social, or governance, at the margin as well, investors are more likely to consider environmental issues versus the S and the G in the responsible investing category. I did mention before that there wasn't a huge difference between age groups in terms of their considerations of whether they do or do not take into account ESG factors. But when you break down the E, S, and G, next gen and accumulator investors are more likely to buy and sell based on environmental factors versus other factors. You can see on the left-hand side, we've broken that number down by age. And then on the right-hand side, what's also interesting to see is that financially advised investors are much more likely to consider environmental factors than other factors, such as the S and the G. That's a quick overview. As I said, all of this research and a lot more further detail is available on the ASX website, but in the interest of time and to have a robust panel session, we might cease the slides there.
Thanks, Rory. Great presentation, and clearly some very good insights into where the investors are not just getting their information, but are now forming their views, and particularly in relation to ESG. So we'll welcome you back in a second to talk more about that on the panel. But now I'd like to introduce Dr. Tim Seigenbeek van Hoekelom, Chief Impact Officer at Social Suite, who will talk to the solutions and initiatives ASX companies could look to introduce to more efficiently access this ESG-focused investor audience. Tim, over to you.
Thanks, David. Really good presentation from Rory, and we find that looking at that retail investment sentiment about what's happening in the market at large, we really see that literally translated back into customers that we work with at Social Suite. So we have a technology-driven solution around ESG reporting. And what we do is we really help companies, mostly on the tail end of the ASX, so to say, the micro caps, the small caps, help them with starting that ESG journey. So what we see is that the larger companies, the ASX 100, they have their head of sustainability, their ESG team. They know what they need to do. They will get on with it. They'll produce their annual and ESG reports. But we see it's the smaller companies that are increasingly listening to what's happening in the market, feeling that urgency around if investors more and more really value ESG, then I need to do something. But what is that exactly? And that is the kind of solution that we've created. Is really a journey you go on, a technology platform with really coaching and guidance around that. And at the moment, we have around 100 publicly listed small caps using our platform, majority of them listed on the ASX, but we do have a footprint as well in the US, but both in Canada and in New Zealand as well. So we have a number of exchanges where we have a wide range of companies, but mostly that smaller segment there that we help with a solution to really get them started to think about ESG. And I think the main thing there is what we see is, like I said, it's about creating a journey. So we've really been going out to both companies about what they're hoping to achieve, what are the value drivers for them around ESG, and also on the flip side, going to those retail investors and asking them, what are the things, the proof points, the tangibles, the information that you want to see? And we saw Rory just present that most of the investors still want to see a PDF, a short video, a little blog. They don't want very long 100-page reports. They don't want hour-long videos. They want short, to-the-point updates. Effectively, what they want is news flow that's easy to digest, and it demonstrates that a company is actually on a journey there to understand ESG and to deliver some initiatives and report on that in a frequent format. So that's how we've shaped a journey there, where we get companies throughout 5 stages of what we call ESG maturity, get them really quickly started in only a few weeks there by initiating their journey, understanding what they need to do, work with them to align around the standard and a framework they're reporting on. So do that onboarding and get them quickly into the game, so to say. And then it's really an ongoing process of engaging with your stakeholders within the business. So it's about talking to the board. Are they literally on board with ESG? Do they need some additional awareness or education? But also going external and thinking about who else is there that is important. So yes, there are shareholders, there are investors, but you have stakeholders at large that want to understand what you're doing around ESG. You engage with them, and then you use that to generate your annual ESG report and quarterly updates. And that's an ongoing journey in which you optimize the work you're doing. And at some point, we do see companies really mature and get to a stage where they have a lot more demands, and we can help them then expand that journey there, which is an optional thing. Most companies really at that micro small end of the business are really working on just building internal capacity around ESG, and that's what we mostly focus on. So what happens then is ultimately, yes, everyone gets that to the point ESG report at the throughout the year. You work towards that, but there's a lot of value points around that we help to create, because that's the thing. One PDF is great, but an investor slide, an ESG microsite, a short materiality assessment, all these things are really adding to the journey and really give you news flow, give you information, and demonstrate that you're actually on that journey trying to understand and improve the work you're doing around ESG. And that's what most retail investors really want to see. They want to see frequently what you're doing, and not once a year a report that was done by the Big Four. There was a hands-off exercise that might look beautiful, but has that really internally built capacity around ESG and really driven policy development and understanding? Often not. So it is about really creating a self-paced journey there for companies. And what you get then is companies, a good example, companies like Latin Resources, they joined us about 2 years ago, and their market cap was just over 100 million. They worked through that process with us. They created their first ESG report, which was definitely not perfect. They had a lot of areas they said, we don't have data, we still need to go out and measure that, but this is our baseline, this is where we are right now. They used that as part of a cap raise about a year ago, and they raised 35 million, but 15 million there was a cornerstone investment from a Canadian ESG fund. So for them, that worked out extremely well. Using ESG in that process was a key driver for them. We need access to capital. How can we leverage ESG to do that? So that's a good proof point. But also on the slightly larger end, one of our US customers said, for us, we really understand that investors want to see ESG scores and ratings. Now we've got one, but we need to be better at getting an ESG report out that's standardized, comparable, and that can easily be used by investors, but also can actually improve our ESG score that we get from ISS Global. So by doing that exercise, getting the first report out, their score improved by 30%. So that was a really quick win for them. So it's those things about being clear what you hope to get out of it, your value drivers, and then actioning that in small, really kind of focused steps throughout the year. So I'll leave it at that for now, David, and I'll hand it back to you and see if there's any questions that have come in.
Thanks, Tim. Now I'd like to welcome Rory and Tim to our panel, and they're now on hand to answer any questions you may have. As I said, there's the chat function on the side. You could submit them and I'll ask the guys directly. That can be either public or private, so submit them at your leisure. But I do have a couple of questions that have already been submitted. Rory, if you look at the investors that make active investment decisions based on ESG considerations, and if I added all the different graph elements together, it looks like to be about 31% of investors genuinely care about ESG at some level. It does seem quite high to me. You know, one of the questions we've had from an ASX listed company is, how do I find these people? You know, the investors that they deal with from a small cap point of view don't seem to be that interested in ESG. Is that a different group altogether, or is it an education of the existing shareholder base?
Yeah, it's a fair question, and it's a challenging exercise to find investors. It doesn't matter whether you're a listed company or a product provider with over 10 million investors in Australia. One of the challenges with having so many is they're quite a fragmented and diverse bunch. So sometimes it is a little bit like herding cats to find the investors that are going to resonate with whatever your proposition is. What I would say is I'd start with, how do investors find you? To maybe just flipping the question there. And as I showed in some of my slides, generally across the entire investor base, there's really 3 or 4 things in terms of how they find you. The first is that they rely heavily on family and friends. So it's probably your existing investor base that is talking to their own family and friends about how they hold their investments. We Australians love to talk about how they invest. Brokers are obviously an extremely important channel here, whether they're online brokers or full service brokers. Full service brokers obviously produce a range of research, and that can be challenging to ensure that there's adequate coverage from full service brokers. But they also do run education series, CEO Connect series. I know ASX as well. We invest in running a CEO Connect series to ensure that listed companies are getting exposure to retail investors via ASX's channels. One of the important things as well, I think, is segmentation. So with a lot of investors, it is important to segment the investor base. So for example, if you segment it by high value investors are prepared to pay for research, and they're more likely to attend face-to-face events and seminars. Then the next question is, how do they consume information? Obviously, they love to consume information directly from the company itself via PDFs and online reading material. And we've talked a little bit already about short videos, short educational videos. I mentioned it already, but we find that any video over 10 minutes, and the drop-off rates are through the roof. So it's really important to keep educational material or shareholder material as short and as interesting as possible. But obviously there's a balance with ensuring that you're disclosing correctly as well. And I suppose the last thing I would say on top of all of that, David, is in some respects, I think you've got to treat it like a marketing plan. You've got to be segmented in your approach. You've got to ensure that you're covering different channels, and you're also covering different mediums in terms of communicating your investment proposition.
Great answer and a lot to take away, and really food for thought. And what I would recommend, and we are going to make the presentation slides and the recording available, is really digest those slides and look at the information that's been presented. If you go back 10 years, as the stats are showing us, how investors consumed information 10 years ago is vastly different to how they consume it today. So if you're involved in an ASX listed company, you should be looking at not just using the platform, which is the key tool to getting information to the market, but then how do you then break that data open or that information open and share it widely through other sources, keeping obviously the materiality considerations in place. So I think that's a vital piece of information, and I'd urge everyone to go back and look at that data at their leisure. Tim, putting you on the spot here a little bit, how do investors use that ESG information? Do they just rely on ESG scores, or are there metrics that they look at for different investor groups?
It is a good question. So what we see is that across investors, more at the institutional end of investors, ESG scores are living a bit more there. But what happens is that institutional investors use ESG scores to a limited degree, but mostly they just use the underlying data. So they get the score from a ESG data score provider, and they actually use their own internal methodology to review that and work out, what is best. We see also more usage of ESG scores in the United States and Europe at the moment than across Australia from our findings. So I think at a retail level, there is less interest in ESG scores and ratings, and it's more those proof points that Rory just flagged. It is things like, just show me quickly what you're doing. Give me that. And what we find works with our customers extremely well. They have a roadshow, a conference, they got 12 slides in there, and they just add one slide at the end about ESG or their sustainability journey, but they keep few things in there. They maybe spend max 30 seconds on it, but that really is not a little proof point there that we're on the journey, just demonstrating to the audience at large that we're doing something here, and just making sure that you invite people to ask questions and come up to you and say, hey, I've never realized that your type of company would be doing that. Tell me more. So it is those value points there. Put it on your website. Like, be innovative on LinkedIn, on your social media. Make sure that you spread it far and wide in really kind of easily accessible format, digestible for people. So little components here and there, that works really well. So there's more value for retail investors to do that than really focus on the ESG score. They're being used, but to a limited degree by retail investors from our findings.
Question for both of you, but I will start, give Rory the first chance to answer the question. Is there an analogy here from other markets? Do we see what's happening in the European markets or the US markets or the Asian markets where Australian investors and Australian listed companies should really take their cue?
Yeah, good question. I don't have a ready response for that. I think anecdotally, Europe is far and away in front of where Australia is from an ESG perspective. So that, and I don't think that matters whether you're looking at it from an investor adoption perspective, whether you're looking at it from a listed company perspective, or even the field that I play in, which is from a product issuer perspective. So I think high level, my comments would be is that there are lessons in particular to take away from Europe and how they engage with investors, both at the institutional level and the retail level when it comes to ESG. That would be, I think, if for any regions around the world, I think we've got to be taking a lead from how Europe approach it. I don't know, Tim, you're probably closer to that from a listed company perspective.
No, you're spot on there. Europe is by far the front runner here. There's a lot of regulation, of course, pushing things forward there as well. But equally, investors are really kind of in tune with ESG there. So there's a real interplay in Europe there between regulation and investor demand. While I would say both US and Australia at this point in time, and Asia at large, are more, I think, investor driven still. There's definitely some regulation on the fringes here and there popping up. The things in draft. There's certain jurisdictions where there is some mostly climate-focused regulation already in play, certain thresholds for businesses. But it's really more from an investor point of view. At the institutional level, I would say it's definitely a must-have. At the retail level, it's really becoming something that is real now for a lot of retail investors. And I think there's an accelerating growth there that people just realize that, well, in the end, it makes a big difference there if the company is doing well. So it is about taking ESG and sustainability information back to the actual investment decision and saying, I want to take financial information and non-financial information, i.e. sustainability information, just into account to make an investment decision. I'm not to say being a greenie or being woke, I'm just making a rational decision here. And I think retail investors are realizing that a lot more. But of course, there's, especially in that next generation, is also more of a movement around really thinking about what does sustainability mean in our world and for future generations.
I think one thing that I would add there from the investor point of view, I don't think it matters whether the investor invests directly in shares or via an investment product. Research from RIA, the Responsible Investment Association in Australasia, shows that of investment products, there's now about $1.5 trillion that use a robust form of ESG or responsible investing metrics for how they allocate their money. And that works out to be just over 40% of the total assets that are managed by those asset managers. So retail investors, whether they invest directly in shares or whether they invest via products, if they have, if they are active in their ESG considerations, are going to either push the listed company or push the product issuer to disclose around what it is that they're doing in the ESG space. So I think don't always look at it from the lens of direct investors. Just as important are the indirect investors through product issuers.
And the follow-up point that's just come through on that, and the European example is a good one. That's a thematic that's not an emerging thematic, that's an established thematic. So if you're a company that you're involved in or invested in that has a project, is listed or is looking from investors from that market, they should have ESG at the forefront of their thinking. But then it should also, from companies with projects elsewhere, we're all going to catch up to that point. So start thinking through, what is European companies doing, both ASX listed and other, to see how they're doing it, because that sort of gives you a bit of the roadmap.
Yeah, spot on.
Yep. A question here in relation to sectors. Are there any sectors that are more likely, less likely to be having an ESG focus from investors?
We didn't track that in our research. We only tracked investors' attitudes towards ESG across the broad range of investing. So we didn't drill down into which sectors they were most likely to invest into based on ESG characteristics, unfortunately, though I'd be surprised if that research doesn't exist in the Australian marketplace somewhere. I don't know if, Tim, you've come across that before.
I think if you flip the question a little bit on the side and say, are there particular industries or sectors that feel a stronger sense of urgency to get on with ESG reporting? I think that is something that we do see quite strongly. It is really more in that resource sector where we see there's a lot of like microcap junior explorers that feel that we're basically, digging a big hole or you're drilling in the ground there. There's a lot of people that perceive that as a negative impact on the environment. So we need to be on the forefront there to make sure that we really demonstrate that we've been doing a lot of these things already for a long time, getting environmental assessments, workplace health and safety, but really doing that in a more structured way to really ensure that it's clear to people that we are doing ESG and it's there quite easily accessible. So we see there's a strong push there, but more and more we see that coming in other industries as well. We've got a lot of customers now in biotech and pharmaceutical as well coming in, and that really are saying, well, to us, it's a logical space to be in as well, to really look at patient safety, drug access, those kind of things are really important to ensure that what we've already been doing is really clearly out there to potential stakeholders, investors that are looking for that type of information.
Is that a bit of a key there, Tim, that when you sit down with a client and talk to them about ESG, they sort of, sit startled in front of you thinking, we don't know where to start, how hard is it, what do I need to know? But when you actually break it down, there's a lot that they're already doing in their space. They're just not documenting or acknowledging that it fits into an ESG strategy.
Yeah, totally. And what we see is that, in particular, if you're a listed business, there's a lot of things you already have to do. And it is under that governance section, bringing that together. And then it is, in particular, on the environment, for instance, you already need to do these things, or you have been doing that already. There's half of the data there. And the social, it's quite easy to pull some information together there. So a lot of companies that we start working with on that ESG journey that say we don't have any ESG material, data, or information, when we do a quick gap analysis, we find that between 20 and 50% of the information might readily or easily be available. And then it's working out in the areas you don't have the information, or even where you have the information, what is really material to your stakeholders and to your investors. Because with sustainability, there's a lot you can report on, but you really need to bring it back to the real material information that actually impacts an investment decision. Otherwise, you're either overwhelming the investor with information or the business with doing the work there. So it is bringing it down to really small steps and looking at what do you already have, what do you actually need to report, and then starting that journey there. So it is not as overwhelming as it might look.
Last question for both of you, unless any come through last minute. Putting your Nostradamus hat on. We've looked at the data. We've seen what it looks like. We've probably followed, Rory in particular has probably followed the trend. What do we think 5 years down the track, 10 years down the track will the data look like? I'm not asking you to make a prediction, but what do you think the data will look like in 5 to 10 years' time? And how important is it to acknowledge what it's likely to look like now when making ESG decisions for your business?
Yeah, so I think from a retail investor landscape, it's only going to increase. I think in Australia, we're still at the very early stages of our adoption of ESG, be that from the investor side of things or from the corporate reporting side of things. We can take a lead from what it looks like in Europe as to where things might end up in Australia. Second to that, from a product issuer perspective, I rattled off the stat around RIA. About 40% of all assets in Australia, a little bit over 40%, apply some sort of responsible investing process. That only increases in the next five to 10 years. So whether it's the self-directed investor or the investor investing via a product issuer, there'll be an expectation that the ESG factors that are relevant to that particular company are reported and are measurable.
I fully echo that, and I think that what we're on is a pathway where ESG will normalize. So it is effectively right now, like I said, you have your financial information and your non-financial information, and that is largely in that ESG or sustainability area. And at some point, it won't be novel anymore. It's just like, I need those two data sets. I need that integrated in the annual report. I need to bring that all together and look at that. And that will inform the investment decision. And I think with that shift generational shift in investors as well, young investors really care about that. So they will be moving forward and they'll be driving that normalization, while also at the same time, there is regulation coming into play. So I think that is the key thing there.
Tim, two last questions for you, which I think the answer will be yes, so it'll be nice and quick. One question that's come through, does the actual social suite product work well with micro-cap medical device companies? And the second question is, do you help companies understand and identify materiality when it comes to ESG reporting?
That is indeed a double yes, but I'll quickly qualify that. Yeah, we work with micro-cap companies across pretty much any industry. We have a range of, like I said, biotech, pharmaceutical, we have medical health technology companies. We have a whole range of companies in that particular area there. So yeah, definitely. And then in terms of materiality, yes, we have a materiality assessment tool, which is a really streamlined tool that helps you quite quickly get an understanding, both internally and externally, of what your stakeholders are looking at in terms of topics, sustainability point of view, what applies to your industry and your business, and what should you really focus on from a material reporting point of view.
Gentlemen, thanks for great presentations, great insights, and jumping into the panel and answering all the questions being thrown at you. That does bring to a close this webinar. Some great investor insights and some clear ideas of how to access this emerging investor audience. Clearly, we can't get through all the information for this important topic in one webinar, but hopefully we've given a valuable snapshot to give you an idea of the size of the opportunity, the best way to engage with these investors, and what you could be doing to improve your own ESG journey. As I said, a copy of the presentation, including a copy of the webinar, will be sent to you all over the coming hours or days. Thank you to the presenters for their insights and to you for your valuable contribution. Everyone, have a great day.
Thanks, Tim. Thanks, David.
You.